Right, good afternoon then everyone, as we're at the end of another week of trading on Friday the 13th of September. We'll look across the calendar, look across markets and see what's going on, and really the main focus of attention was the US and CPI. Did have the ECB cut interest rates yesterday. Not too much really was made of the ECB cutting interest rates. It was widely known. The markets didn't give too much away in the meetings, although they haven't ruled out cutting interest rates again in October, which will obviously be the next meeting. And that is probably not a good thing for the euro, but hasn't really been reflected too aggressively in markets. So nothing really to see off there at the ECB yesterday. Again, they made it pretty clear to markets they were going to cut interest rates. Markets have priced it in. Absolutely no surprises there whatsoever. Inflation, though, a bit of an interesting one. The month-over-month core CPI print beating consensus up to 0.3 from 0.2 with a consensus of 0.2. You then look at the headline figure year over year, though. Now, previous to 2.9, that has come down 0.4 down to 2.5%. Now, core CPI still being at 3.2%. I mean, it's not a situation where you cut interest rates by 0.5%, is it, at the next meeting? But ultimately, that's what markets are pricing. They're pricing a 50-50 decision when it comes to the Fed next Wednesday, and ultimately, that should prove some tradable opportunities next Wednesday. If the market is unsure, split 50-50 on whether we get a 25 basis point or a 50 basis point cut. One way or another, we should get a move on the US related assets, so should be a tradable opportunity there next week. What you've seen off the back of that CPI is this gone back to 50-50. It was 25 and 75 before CPI, now it's 45 and 55, so an interesting one. Definitely. I mean, as I said, core CPI at 3.2% doesn't really warrant a 50% basis point cut, but ultimately that's what markets think, and the rest of the economic data doesn't really suggest that's necessary either. But there seems the Fed seem intent on getting interest rates down so they don't cause major problems going forward, having interest rates where they're at. So I can kind of understand it from that respect, but as I said, 3.2 core CPI, it's not something to completely forget about, I don't think. UK data has been okay this week. I mean, the unemployment rate from the UK was okay. It was in line with consensus, but was below previous, which is a good thing. GDP, though, came in at 0% for the month of July, below consensus, and that wasn't too great. But you did still have the pop higher in cable yesterday. My opinion stays the same as it was on Monday on that, and I suppose it has kind of materialised over the course of yesterday. If you jump across to the charts, you can see, on Thursday you had some downside, a pretty heavy downside across the US dollar, across your Aussie, Kiwi, Euro and Sterling. Dollar Swiss downside, dollar yen downside. Dollar CAD's in a kind of world of its own, doing its own thing over there. Kind of leave that one out, but pretty broad-based US dollar weakness, and also pretty broad-based equity strength. I mean, you can see the S&P, the Dow Jones, the Nasdaq, the Russell all pushing higher. Right, you then look at US bond yields kind of grinding their way lower, not really at any sort of aggressive pace, but certainly a repricing on predictions for interest rates, and that is something that gold likes. Gold historically likes interest rate cuts. Also, it historically does not like interest rate hikes, but it's still trended higher, even though you've got interest rates where they're at, and did trend higher when you were hiking interest rates. So ultimately, gold up here at all-time highs, just fresh all-time highs in the last 15 or so minutes. Was fresh all-time highs yesterday. Obviously at these highs, every green candlestick you get is all-time highs, so not kind of major breaking news on this candlestick, but yeah, you can see what previous 15-minute candlestick, fresh all-time highs on gold, although they did print fresh all-time highs at 11:15 this morning as well. Apart from that, it's kind of what we were looking at earlier on in the week. We were looking at some US dollar downside. Equities, we were 50-50 on, and as I said, you'd kind of rather be long equities anyway or rather you'd rather be long than short equities any day of the week. So that has continued its way higher, maybe a little bit less predictable than something like the US dollar. Right, the US dollar, you're looking at one way or another, the Fed are going to cut interest rates next week. Some of these central banks may not even cut through to year end. A bit surprised the euro kind of hasn't really sold off post ECB. It's just kind of ripped higher, but that is more of a dollar move than anything else. But going into next week, I still think probably being short dollars, long stocks is a better way to be. But you got the Fed then on Wednesday. We'll see how that pans out. Got the Bank of England next Thursday. We got the Bank of Japan next Friday. So pretty busy week on the central bank front, which we will no doubt cover when we get around to it. So, anyways, have a good weekend, and we will speak to you next week for another week of trading.